Sharp recovery on Dalal Street from the day's low. Midcap index recovers over 1,300 points from lows. Financials in the green, while realty and industrials are the big losers. On the eve of Prime Minister Narendra Modi's visit to Washington, Republican Congressman Rick McCormick tells CNBC-TV18 that the U.S. would like better military sales to India and less buying of Russian oil. On a positive note, he adds that the U.S. will turn to India for products China makes. The government is set to table the new Income Tax Bill 2025 in the Parliament that will become effective from 1st April 2026. The bill is expected to simplify India's income tax laws for ease of compliance. To find favor with the investors. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. Thank you so much for tuning in, coming in from CNBC-TV18 Motilal Oswal Studios. A quick look at the markets because surely a pretty picture is turning up after we've seen like post 10:30 we've seen that recovery set into the market and that is what we're looking at. Nifty recovered from the day's lowest point, more than a 200-point recovery from the day's low because at one point of time it was at 22,798. That was around the low that we saw coming in. As of now, almost in the day's highest point is what the Nifty is trading at, flip-flopping between the red and green. About the 23,000 mark is what we are looking at in terms of the Nifty 50. Sectors which have recovered sharply today also are PSU, banks as well. So let's look at PSU banks specifically, and the financial sector as a whole has seen a decent recovery coming in. PSU bank specifically now is trading with gains of more than 1%. Financials trading with gains of 0.5% in trade as well. Other than that, Nifty metals is another sector which has come up in the trading session today. Strong gains coming in on that front as well. Almost a gain of 1% that we're watching out for and trading in the green comfortably. Stocks that are trading off the day's low, we have HDFC Life, SBI Life from the Nifty 50, Apollo Hospitals and Adani Enterprises. These all have come back strong, making a strong comeback from the red to the green, especially all these names that we're seeing in terms of moves. And on the broader market front, Samvardhan Motherson, Mascow Dock, Hudco, as well as IRFC, some of these other names which have made a good recovery from the lows of the day. And yes, recovery in the market is what we're watching out for. Will that sustain is something that we'll keep you through, updates all through the day in the next couple of hours as well is what we'll take you all through. But as of now, Amphi, that is the one we are focusing on because they came out with the mutual fund data for the month of January that we are watching out for. What came out in terms of the SIP data as well is interesting, 26,000 crores. Surbi is here to take us through that recap for the data that is coming for this month.
Well, thank you so much for that. And indeed, what a rock-steady, solid show by retail investors. They've kept their faith in mutual funds, even though the market has been testing investors' patience throughout this market fall. So let's go through a couple of key headlines that have come in from the monthly data. Number one, the total inflow into equity funds is a rock-steady, solid at about 39,706 crores. This is marginally, very, very marginally lower from the records that we hit in December last year when the flows were in excess of 41,000 crores. Number two, all the key categories, large cap, mid cap, small cap, all of them have got pretty steady flows. In fact, flows into large cap funds have swelled by over 52% month on month, January over December. The small cap category has also seen a lot of interest. Small cap funds have surged about 22%. January over December. And the mid-cap category, while month-on-month there's no surge, but the numbers are still looking very, very good because mid-cap funds have pulled in over 5,100 crores in the month of January. Let's talk about the sipping story. Investors have continued to sip their way through this market fall because those record inflows that SIPs were drawing in December, those numbers have continued in January as well. The number for January is now at 26,400 crores. So nothing to really scoff at over there. Another very interesting trend are gold ETFs. Gold ETFs have seen a big surge. Some of it would be because of the mark-to-market gains and some because there's excitement and perhaps people are chasing the gold story. So the number for the gold ETF category is 3,751 crores. Contrast this with just about 640 crores that came in into gold funds in the previous month. Now let's talk about the hybrid category. No problems there as well. In fact, flows into the arbitrage category have surged big time, which is why the total hybrid category has seen a very decent growth, 100% growth actually in hybrid funds to 8,767. And the popular categories like balanced advantage funds, they've continued to draw steady flows, and multi-asset allocation funds, as people understand the benefits of diversification, those funds have pulled in once again over 2,000 crores as well. Last but not the least, another slightly healthy sign, I would say, is the fact that the NFO frenzy has cooled down a little bit with the market fall. NFOs have pulled in far lesser than what we saw in December or some of the previous months as well. NFOs have pulled in about 4,500 crores in terms of total inflows across 12 launches. Contrast this with almost 13,600 crores that was pulled in December, over 33 NFOs. So some of that has cooled off, but otherwise people have kept their SIPs going. They've continued to invest in equities, and perhaps that lesson about investing for the long term has been driven home quite well.
Absolutely, Surabhi. Thank you so much for that roundup coming in on the mutual fund data. But let's move on. CNBC-TV18 has reviewed the new income tax bill, which is likely to propose 23 chapters and 16 schedules. Tim C is joining with us to give us the details on this one.
The new income tax bill proposed to be introduced in the Parliament has now been formally circulated to the members of the Parliament, and as per a copy accessed by CNBC-TV18, the bill runs over 600 pages, proposing an Income Tax Act 2025, replacing the earlier Income Tax Act of 1961. The bill proposes the new act to come into effect from 1st April 2026. It is divided into 23 chapters, 536 sections and 16 schedules. The bill proposes simple terms like tax year and financial year, replacing the terms such as assessment year and previous year. As per the bill, tax year would mean the 12 months period of the financial year starting from 1st April. The bill also proposes specific mention of finance companies and finance units in the context of dividends. As per the compliance and procedural changes, the bill proposes introduction of taxpayers' charter. The bill also proposed detailed section suggesting that foreign companies to be deemed residents. The bill has expanded the tax base for deemed income, capital gains and international transactions too. The bill also proposes to include virtual digital assets in the definition of property. However, the tax rate remains the same at 30%. Just for the clarity of our viewers, none of the tax incidences have changed as per the new bill and as per the act which is now being proposed. The bill has been further proposing more deductions for R&D, electric vehicle loans and rural projects. There are more stronger measures on tax avoidance and digital compliance. The new income tax regime for individuals which was proposed in the budget has been included here. Also, enhanced penalties for misreporting and non-compliance and incorrect disclosures are also part of the bill. All in, the bill looks more like further simplification, but yes, when it comes to rate changes, etc., nothing has been incorporated, so the bill remains same in terms of tax incidence and as per the tax charge. Back to you.
Okay, Dempsey, thank you so much for that. But let's also get you some updates on a relegate case. The Delhi High Court has refused to hear Rashmi Saluja's plea seeking to block the Burman's open offer. Ashwat is joining with us to give us more updates on this one. Ashwat, take it across.
Well, a fresh legal setback for Rashmi Saluja. Post her ouster late last evening, she had filed a fresh application before the Delhi High Court seeking a stay of the Burman open offer. Now, what's important is that the Delhi High Court was not impressed. The Delhi High Court used words such as misplaced arguments, went on to say that this is a misuse of the process of law, subsequently went on to even warn of action against Rashmi Saluja. And it is after this backlash that her counsels in the Delhi High Court admitted defeat, said that they'll withdraw their application, and that calls to an end their legal challenge as far as the open offer is concerned. So no legal hurdle as such as far as the open offer is concerned. Now, speaking of the Burman open offer, another important trigger to highlight for the benefit of our viewers. Bear in mind that just last week, on account of a petition that had been filed by Danny Gaikwad, a US-based investor who's promising a counter open offer to the Burman open offer, on account of that, the Supreme Court had given time to Gaikwad till today, till February 12th, to make an earnest money deposit of 600 crore rupees. Now, sources tell us is that he's not impressed with the regulatory hurdles here, that he's having quote-unquote second thoughts. Now, what happens in a situation where Danny Gaikwad doesn't cough up that amount of earnest money deposit of 600 crore rupees? Well, the Supreme Court had very clearly prescribed that on failure by Gaikwad to cough up that amount, the open offer will close today, will close as of February 12th. Now, that's a big trigger to watch for. Bear in mind, the conversation around the Burman open offer had begun in September of 2023. That's almost 18 months back. And finally, if that earnest money deposit doesn't come in, that offer could finally see closure today after 18 months of litigation. Back to you.
Okay, Ashwin, thank you so much for that, keeping an eye out on that news flow and news update coming in. But let's move on. A day after Chief Marshal A.P. Singh expressed his unhappiness with HAL's delivery record of the Tejas Mk1A fighter jets, I beg your pardon, the CMD has admitted that some factors, particularly with the engine supply, are beyond the company's control, as General Electric was supposed to deliver their engines in 2023, but they pushed the timelines. He also added that all the efforts are being made to ensure that the aircraft is ready and delivered to the Indian Air Force.
We have had a setback in terms of engine supplies from General Electric, and they've been delayed since August 23. Now GE has assured us that they will deliver these engines from March 25 onwards, and we expect 12 engines in this year. So I think the technical issues are behind us, and we will be able to deliver these aircraft.
Okay, and here's a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for the SME Champion Award Season 2. Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on and ask Prime Minister Narendra Modi draws closer to his bilateral visit to France. He is now headed to the United States, where he is scheduled to meet the US President Donald Trump. My colleague Parikshit spoke with a range of experts on significance of PM Modi's visit, the growing defense ties and a potential trade deal. Listen in.
Prime Minister Modi will be just the fourth foreign leader to meet with President Trump since he took office. I think that it says something about how important this administration views the relationship with India. And, this is going to be a bit of an unusual meeting in the sense that these are the early days for the administration. A number of key posts in this administration focused on India have not yet been filled. So I don't think that we should expect major substantive discussions and splashy deals, but I think that there will be a lot of opportunities for the Prime Minister with President Trump and other senior officials that he meets with to chart out priorities for the relationship. But I do think that we will see the transactional side of the strategic partnership too. I suspect that there will be some discussion and some asks, so to speak, from President Trump and perhaps from Prime Minister Modi on a variety of things, whether you're talking about trade or energy.
It's quite possible. I mean, the White House has indicated that India will be prioritized as a relationship among leaders ahead of almost any other country in the world. President Trump has said that trade deals with partners or small groups are possible and on the table. Now, last time President Trump was in office, they were talking about a trade deal, but I'm always quick to remind folks, it was really a cessation of hostilities rather than a prospective trade agreement with customs duty reductions and things. It was resolving some pain points rather than something aspirational. But I do think you're right. I mean, they might be looking for a home run or a sixer this time. A way to resolve a lot of the little issues is put something big on the table like a trade agreement. So I wouldn't be shocked if it's on the agenda.
Okay, and the Karnataka Global Investor Meet is underway with big-ticket investments coming in on the first day of the summit. Ritu is here to tell us more about this.
Well,
Well, the 3-day-long Karnataka Global Investors Meet has kicked off with an inaugural event that was themed Reimagining Growth. And on the first day itself, the state has been able to procure investment commitments worth 5 lakh crores, apart from signing several MOUs with both domestic and foreign companies. The bulk of these investments have come in green energy to the tune of 3.43 lakh crores. The Mahindra Group with committed investments of about 40,000 crores over the course of the next few years, and JSW Group with investment commitments of about 1 lakh crores have been some of the key investors. Keep in mind that Karnataka is targeting to garner total investments to the tune of 10 lakh crores through this summit. And, realization has been a challenge, but the state has promised that it will try to convert at least 70% of these into actual real investments. Apart from this, the Karnataka government has also announced the new industrial policy for 2025 to 2030, which targets investments of more than 7.5 lakh crore rupees and aims to accelerate the growth of manufacturing in the sector to about 12% per annum and generate employment opportunities for around 20 lakh people. The government has also announced the new single window clearing system for faster investment clearances as well. In terms of the key investments that have been announced, JSW Neo Energy about 56,000 crores in renewables, JSW Group across cement and steel about 43,900 crores, Tata Power 50,000 crores, Renew about 50,000 crores, Mahindra Susten another 35,000 crores, and importantly Lam Research about 10,000 crores to invest for semiconductor equipment manufacturing in the state of Karnataka has been one of the key investment highlights that has come in. So action-packed day so far. More is expected in the coming days.
Thank you so much for that, Ritu. But let's, on that note, actually take a very short break. When we return, we will get you the updates on Elon Musk's meeting at the Oval Office. Welcome back to Business Lunch on CNBC-TV18. And moving on, CEO of Tesla, Elon Musk, accompanied by his 4-year-old son, was at the Oval Office in the White House, where US President Donald Trump signed an executive order to continue downsizing the federal workforce. CNBC's Emon Havers is joining in with us to give us the highlight.
And Elon Musk was asked by reporters in a number of different ways about the critics of Doge, his government efficiency operation, who say that Elon Musk is basically operating without any accountability, without any transparency, without any checks and balances in the normal course of business. Here's what Elon Musk had to say about that.
All of our actions are fully public. So if you see anything, you say, like, wait a second, hey, Elon, that seems like maybe that's, there's a conflict there. It's not like people are going to be shy about saying that. Transparency is what builds trust, not simply somebody asserting trust. So not somebody saying they're trustworthy, but transparency, so you can see everything that's going on. And then you can see, am I doing something that benefits one of my companies or not? It's totally obvious.
And if we thought that, we would not let him do that segment or look in that area if we thought there was a lack of transparency or a conflict of interest. And we watched that also.
So you heard the president there at the end saying that if he thought there was any conflict of interest, he wouldn't let Elon Musk do any of the things that he's doing. The problem with that, the critics will say, Melissa, is that really it's just down to the White House's judgment about whether it's appropriate for Elon Musk, for example, to be involved in Pentagon spending decisions when the Pentagon is obviously a huge contractor of Starlink, or with NASA spending when NASA is a huge contractor with SpaceX. So we'll have to see how this relationship sorts out over time because, there are some potential conflict of interest pitfalls here for Elon Musk. But as for now, he says, look, everything I'm doing is public, and Trump says we'll keep him away from anything that wouldn't be appropriate.
Okay, but with that, it's a wrap on this edition of Business Lunch on CNBC-TV18, leaving the Nifty at around about the 23,100 level. Keep an eye out on that. Up next, your Midcap Radar.